Hello and welcome to this August 27th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at the Dow Jones U.S. Financial Index. This is on StockCharts, the $ DJUSFN. This is an index chart that I actually take a look at quite often. We've referenced it a couple of times recently in our Market Pulse newsletter, and it's also been a frequent topic talking about financials in our member chats and in our market chatter, both of which are part of our premier membership. If you take a look at this chart, really what I'm plotting here is down below you've got the chart of the Dow Jones U.S. Financial Index going up and down, and at the very top of the chart I've got the S&P 500 making moves both to the upside and downside. But notice I've broken these time frames down into periods, and as you can see, during periods when the financials have done very well, like they did in the third quarter of 2009, also like they did in about the second half of the first quarter of 2010, and then even into early part of April, you can see that the financials, when they've done very, very well, that they've helped lift the overall market. You can see the S&P 500 also doing very well during periods where financials are advancing to the upside. But when financials have struggled, when they've either gone down or when they've just simply gone sideways, you can see that the performance for the most part on the S&P 500 has not been nearly as strong. Now back on August the 8th, we had indicated, and I think this was in our Market Pulse newsletter back then, we had indicated that the S&P 500, which was trying to break above 1131 resistance, we were in a downtrend. In order to break this intermediate term downtrend, we needed to take out this June high at 1131. We were right up against it, and as we were trying to make this move to the upside, you can see that the financials actually started moving down in early August. And what we had indicated back then was, and our exact comment was, this chart clearly depicts the impact the financials have on the S&P 500. If you think that equities are going higher without support from the financials, you're likely going to be wrong. Therefore, we must break out above 270 to 271 on the Dow Jones U.S. Financial Index to have a reasonable chance to extend the market's recent gains. Now that was back on August the 8th. On August the 15th, you can see that we updated it and said that note the failure of the financials at price resistance and the impact that it had on the S&P 500, and you can see that clearly inside these red circles. The financials fell apart, we lost this uptrend line, and as they continued to fall, take a look at what happened to the S&P 500. Now, bringing all this together, you can see from this thick green line here, this is the long-term price support level on the financial index. We have not traded below 240 on the financial index. Certainly we haven't closed below 240 looking back over the course of the last year. So if you're wondering, okay, which way is this market going to go? Well, the chances are, if the financials break down to the downside and you start seeing this financial index closing in the 230s, chances are the S&P 500 is going to follow suit and probably is going to break beneath the 1022 close that we had at the end of June, early July. I believe that was the low close at 1022. So I'm keeping a close eye on the financial stocks. They always tend to lead the market both to the upside and to the downside. So it makes sense to me that if we fail to hold on to this key support level, then the S&P 500 is also likely to fail to hold on to its support level down around 1022. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.